The chaos in the crypto market continues at full speed and the end is nowhere in sight. Bitcoin dropped below $62,000, interest in the cryptocurrency is at a record low, and investor fear is at an extreme level. The situation is a bloodbath among altcoins as well, with Ethereum falling to $1,700 and Cardano crashing to a 5-year low. In today's video, we'll also talk about Worldcoin, which, despite the carnage, is up 70% over the past week. If you're enjoying the content, hit the like button, leave a comment and subscribe to our channel with the notification bell. Last night, Bitcoin crashed to around $61,000, hitting its lowest point since early February. The leading cryptocurrency has registered a drop of nearly 20% over the past 2 weeks, and it already sounds surreal that back in October last year it was trading above $125,000. In previous episodes, we mentioned that the main reasons for the collapse are the escalating tensions in the Middle East and the fully dominant bear market in the crypto sector. Today, we'll highlight two more factors that also play a role. First is the declining interest from institutional investors, more conservative players like pension funds and hedge funds who usually jump in with significant amounts and prefer to invest through ETFs rather than dealing with exchanges. Over the past 12 days, outflows from spot Bitcoin ETFs have far exceeded inflows, which means these investors have drastically reduced their exposure to the cryptocurrency. And since we're talking about spot ETFs, this means that the companies behind these products, such as BlackRock, Fidelity, and many others, have had to sell Bitcoin to cover redemptions. By the way, this is the first time we've seen 12 consecutive red days for spot Bitcoin ETFs since their launch. Another factor that likely negatively affected the price of the digital asset is the increasing amount of coins held on centralized exchanges. CryptoQuant data shows that the number has swollen to a 3-month high of over 2.72 million, meaning many investors have recently moved their holdings from self-custody to such platforms, which is often the step before selling. Moving on to Ethereum, which is also facing serious difficulties. Its price is down about 25% over the past month, and at the time of this recording is trading around $1,750. The situation certainly looks concerning, but according to analyst Andri Ajima, the current crash may turn out to be a once-in-several-cycles opportunity. He believes Ethereum has entered a zone that historically has preceded strong recoveries. The reason is simple: excessive fear often leads to overselling, and when the price drops too fast and too far, the market usually reacts with a sharp rebound. This is not a prediction but an observation from previous cycles, and still a factor many investors watch closely. Another important element is the fundamental picture. Despite the price drop, the Ethereum network remains active and interest in solutions such as EO2, tokenization of real-world assets, and institutional integrations continues to grow. This creates a paradox. The price is falling, but network usage remains stable, which often suggests the decline is driven more by panic than by actual deterioration of the technology. Cardano definitely isn't falling behind in this crypto drama. While Bitcoin and Ethereum are bleeding, ADA completely collapsed. The price fell to around 18 cents, the lowest level since 2021. This understandably shook the community and raised many questions about whether the project has entered its toughest period yet. Cardano's founder, Charles Hoskinson, warned that the ecosystem is facing failures that need to be addressed. He hinted at governance issues, lack of coordination, and delays in the development of key components. This, of course, doesn't mean the project is doomed, but it highlights that Cardano is at a critical moment where it must prove it can adapt and accelerate its development. At the same time, there are more optimistic voices. Some analysts note that such deep declines have historically been followed by strong recoveries, especially by projects with an active community and long-term vision. Cardano still has one of the largest and most loyal communities in the crypto space, and developers continue to work on improvements like Hydra and new scalability features. Worldcoin is one of the few bright spots lately. While almost the entire market is drowning in red, WLD exploded, posting over 70% growth in a week and adding another 20% in the last 24 hours. Sentiment data shows that transactions over $100,000 have reached their highest level this year, clearly indicating increased accumulation by large players. Meanwhile, network activity is rising and the upcoming reduction in token emissions further fuels optimism. The combination of lower supply, higher interest, and aggressive accumulation creates the perfect storm for a bullish impulse. And that's exactly what we're seeing with Worldcoin right now. According to an analysis by Maelstrom, the token may be only at the beginning of a much larger move. Arthur Hayes' funds predicts a potential 900% surge, citing an upcoming wave of AI IPOs that could skyrocket interest in projects at the intersection of artificial intelligence and cryptocurrencies. Worldcoin is exactly such a project, positioned as digital identity infrastructure for the AI era. Analysts also emphasize that WLD is one of the few tokens that genuinely benefit from the explosion in the AI sector. If major AI-related companies go public and attract massive capital, this could lead to a spillover effect where investors begin seeking related crypto assets. Of course, such predictions are speculative and should not be taken as financial advice, but it's a fact that Worldcoin is currently among the most discussed projects in the crypto space. That's where we wrap up, friends. Have a great day and see you tomorrow.